Good day. Ira Epstein of Linden Associates with your metals market wrap-up for this Tuesday, the 19th of May, 2020. We're about 5:15 p.m. Central Time, which means the quotes behind me are for Wednesday trade, and that's what I'm trying to do right now. I'm trying to start right after 5 each day, let the markets open. I think it gives us a better edge as we talk on these markets. Gold gaining on silver a little bit tonight, but you know, it's been the opposite for about a week and a half or so. Silver market is at one of these points in the market where I think you're in your fifth day where you're over the upper Bollinger Band. I give it 1% chance because of that of staying over it. What do I mean? I count on Bollinger Bands. Well, why don't we cover that when we get there? It gets more interesting. In the dollar index down, most of the currencies backing off tonight. Now, the stock market, as you can see, very close to unchanged, but it gave back literally most of the day's work in the last half hour of trade as I was watching a cabinet meeting at the White House that was going on, and whatever it was, the market didn't like either that. It was starting to rethink the Moderna idea of the tests, and you know, I've been critical of this. A small phase 1 test. All over Europe they're doing small phase 1 tests. To think the market's got a cure because of that? Nonsense. You've got to get into phase 2 and then the large phase 3. Go online, read about how this is done. That does not mean we're all not praying for this. We want there to be this. This is nonsense living this way. But to put all your eggs in a basket because they successfully hit a phase 1, well, Google it. How many of these research firms have hit a successful phase 1, and you get an idea. On the energy markets, backing off a little bit, but when you look at how the API numbers came out, they were flat. Now, what do I mean by flat? Well, you got a build in one area, you got reduction in the other. Instead of these net big builds we're having, they came in with literally a flat number, 0. So that's a good sign. Bonds and notes probably overdid it to the downside recently, getting a little more of a bounce. So let's go to the charts and let them tell us what's going on. In the gold market, so far the highest close we've had, and this is about a 7-year period, by the way, 1756.30. We're right now at 1748.90. Okay, we can live with that. Still very, very good, strong action. When we take a look at the June gold, the daily bar, and this is still where the volume is. It won't be this way in another couple of days. So probably next week I'll move to the August gold for us. But you can almost see a trend line that's been coming up in the market. What's the pattern on the swing line? Well, that's what I always look at. The pattern right now is higher lows. We don't know if this is a swing line low. It would have to take out today's high, and today's high, just so you know, was 1751.60, 1750.40 is tonight's early high. So I know these are in play, and I know I have the higher high, so you'd have to get back under this low in order to do damage. It's around 1692. What about where the support is? Well, on a break, if the market did not take out today's high and just broke down, I'd look for support at 1719.60. What I wouldn't like to see is the market first get up over today's high and then fall back down to it. That would not be a pattern that would get me interested in buying more gold. That would get me into a pattern that, hey, watch out, you can get more of a correction than you're ready for because you could set up lower highs, lower lows into a test of that 18-day average. And if you closed under it, you'd have the trend down and the bias down. So I know what I don't want to see. What I do want to see is a pullback to 1719.60 without doing that, because I think the bulls will show up at that number. As you know, I was looking for the market to fail on this test of the upper Bollinger Band. Why? I teach that the first test of an upper Bollinger Band is generally a failure. It's where you get the public sucked in, the market's breaking out. It generally doesn't. Why? Because the idea of the Bollinger Band algorithm is that 95% of the time the market will trade within it. And you always pay attention, are the bands narrow, which these are not, or wide? The wider they are, the greater the probability of a failure at that band. That's what's going on right there. That's why I'm looking at the way that I said. So what I'm looking at also is this market. Now, it's been dropping, but because we have one of the readings over 70, we're in overbought condition. So I'm going to repeat what I don't want to see. I don't want to see getting over the highs of Tuesday and then dropping down and getting under this 18-day average, because you could be turning the momentum down, you'd have the bias down, and then the swing line down. In other words, a bear trend. So you don't want to see that. That's what I think, at least. But remember, you're always doing, it's like how do I explain it? You know, you ever see how they do footballs and plays and the coaches there, they have everything? Or if you're, I'm a basketball fan, so I'm always watching what they do, and you see how they figure out where the plays are going to evolve. Same thing in charting. You're always looking what you want to see or don't see. In the gold-silver ratio, this was a breakout when we got under these numbers right here. So the market still into that number, and as I said, you might be headed back to, let's call it roughly that 90 level before everything gets settled. Silver now has 4 days in a row of over the upper Bollinger Band. If it's over it today, it would be the 5th day. So it's day 1, 2, 3, 4. My rule of thumb, I count each successive close is taking away one of the 5 percentage points of the market settling over the upper Bollinger Band 5% of the time or under the band 5% of the time. So right now I give it 1% point left, in other words 99% against it. That is not 100, and even if it continues going, what does it mean? You've got strength, real solid strength in this market. This was a breakout when we had 2 days in a row over the upper Bollinger Band. That's what you look for. Generally, you just get to these bands, you whip around them just like you did here. But you get out of them, you got to recognize when you get out of them. So you got out, pullbacks, probably first support 1654. You'll say, whoa, that's a long ways. I can't help where it is. That's one of the numbers I'm looking at. In the copper market, I'm looking for a failure right here. Now, if we take a look, this settlement at 240.40 was under the Bollinger Band right here of 240.50. Yesterday you closed over it, first day over, and so far you're getting thrown back. So the typical play where you get up to that band, you back off. This is what you call a narrow band. And it's in here that you get your butt chopped. And the reason is you think you're going to break out one way or the other, and it just keeps hurting you. You have the same pattern in the bonds and notes, and it's ugly. I've learned over the years what to avoid. This is one of them. Then you get to the platinum market, and let's take a look at this because it does get interesting. Right here, this settlement at 817.10 was over 812.30, the Bollinger Band. Here's the second one. I consider this now a breakout. First resistance, the 100-day average. The market trying to extend, so now I've got 3 days over the upper Bollinger Band, and with tonight backing off a little. So you know what I'm going to tell you. The one thing I teach is you don't buy over a Bollinger Band, and you don't fade strength. You may want to, that's not what I do. I look for the market to come back in to the Bollinger Bands, then I start looking for the support areas. The first projected support is the 100-day average at 862.70, and in here there's a couple of other averages I'll look at. But we are overbought, over the band, a strong market, but nowhere near embedding. No, I'm not that interested in that. In the palladium market, you're up to the combination of the upper Bollinger Band and the 100-day average. That's formidable resistance, big time resistance. You got through that. Let's come back on one chart here. When you first got to it here, that's what I'd call formidable resistance too. You got over it. We'll see if it can stay over it. Generally, those numbers have a way of stopping markets from running away. That's what I see here. Am I bearish? Not in your wildest dream. It looks to me like all the industrial metals have decided to enter a bullish phase, and rightly they should. We're getting factories opening, the auto factories. Nobody goes in and just throws a switch and you're suddenly doing everything. But I don't care if it's a factory with 50 people or a factory with 20,000 people. They're getting back to working. And in working, they're going to consume industrial products, whatever that is. It could be steel, it could be copper, palladium, platinum. Whatever it's going to take, they're going to do it. And that's what we're starting to see, the market's anticipation of that. So it's better to be open than closed, right? And in the dollar index, you are void of a trend. This is the typical narrow band, whipping back and forth. Try to imagine you're buying here looking for the breakout, it falls back on you. You don't go anywhere. You're so frustrated. Stay away from this. That's what I teach people. Just stay away from those. They cannot do you any good. Now today, pivot points. I had a trade on for my subscribers in the coffee market of all things. They went short yesterday and I'm watching the market break today. And I'm watching as the market's falling down to one of my support areas. And what am I looking at on this? Well, I know the formula, but when you look at this, you get resistance levels, a neutral number, and then support numbers. There can be more support numbers. Generally, there's 2 resistance, 2 support numbers that most of the pros use on these charts. They'll look just like this. So I look at a market at its neutral number and decide what's it doing. Sometimes you're up to this number, and if you fall back, you can view this as support. It depends what your position is coming in. That does not mean you're not adjusting your positions during the day. Try to imagine, you're on a road driving. Do you think you don't adjust from the left to the right lane? Of course you're doing that. Well, why is a trade not while you've got it open for adjustment? So what I'm looking at this morning, I'm looking at momentum. I'm going, and maybe this is 6:37 in the morning. And I'm looking at the momentum, and the momentum had turned down. And I'm watching it turning down, and I'm going, this could be the shot for taking some money off the table. Doesn't have to get to my total objective. Then you can move your stops, whatever. As it turns out, I used exactly what I teach in this. Doesn't matter how the trade turned out. That's not the key. The key is I've put together for you a 3-part free video series that if you're interested in using some of these tools, well, this is one of the ways to do it. Simply go to our website. Under it, you'll see free offers on the right-hand side. Sign up for it, or click here. If you're watching me on YouTube, it'll take you there. I think you'll find it worth your time and effort. And by the way, if you're a SPDR ETF trader, a chart's a chart. The ideas work. As far as I'm concerned, the theory, I shouldn't say work, the theories work, whether it's a stock market chart, a futures chart, an options chart. To me, they're all the same. Take the name off the chart. That's the first thing I teach in my charting course. Learn to trade the chart. If you have the name on it, you get swayed by the ideas. www.iraepstein.com, our free offers, and you can click up here to get there as well. I'll see you tomorrow.